On the surface, they look pretty good, Brooke.
Yeah, they look pretty good, and this is another company that's reporting better than expected earnings at both the top and bottom line. When you take a look at the numbers, we did see a slight miss on revenue there, but adjusted earnings did come in better than expected, really powering that momentum behind what would be this very large expectations for this third quarter reports. And that's why you see the stock moving higher this morning. It popped about 2.7% in early innings of the pre-market trading session this morning. And if you take a look underneath the hood, there were a few key things that really stood out to me in this report. We've been talking about this bifurcation of consumers. Of course, Coca-Cola, a brand that really caters similar to PepsiCo with different segments to different consumers here. But we did see growth in Coca-Cola Zero Sugar, something that we've been talking about as consumers really seek out alternate options. Also, particularly here in North America, as well as other regions, we did see water and those sports drinks also stand out in the quarter. And beyond that, they reiterated their guidance. They're expecting organic revenue growth to end the year. They're also expected adjusted earnings to grow as well. But we did see North America volume flat. And that's really different than what we've seen in years past, particularly 2021 and 2022, when many consumers were at home and consuming Coca-Cola that really drove volume growth up. To give some context, global unit volume grew about 1% this third quarter, but that's far less than the 4% growth that we saw in the third quarter of 2022. And there were some things that right now are being mentioned on the call that contributed to this. They said that some factors are transitory this quarter. They had unusual weather, but there's also some long-lasting factors like inflationary pressures, uncertain trade dynamics, and an ever-changing geopolitical environment. That's certainly impacting consumer demand right now, but they did say that affordability is a key feature, as well as innovation like that Coca-Cola Zero Sugar, which saw 14% growth this past quarter.
So I'd like to talk a little bit about volume versus price, because it seems as though the sales increase was due largely to price increases. What does that tell you about customers' capacity to absorb those price increases? What are you seeing?
Yes, well, overall, we had a very solid quarter, and as you said, driven by good pricing and also good mix. Our pricing around the world is pretty much in line with inflation. And in this quarter, we saw the benefit of brands and categories where higher income consumers are engaged more with. Brands like Topo Chico, Fairlife, and Smartwater here in the US outperformed and gave us a nice tailwind for the quarter. On the volume front, you got to get underneath the headline number, look at performance by region, and look at the consumer segmentation we have in different parts of the world. Typically our developing markets is where we would see stronger volume performance. This particular quarter, we've had some headwinds in Latin America and in parts of Asia that have dampened the volume demand. But overall, we were pleased to post a positive volume number overall.
John, you mentioned something that we've been hearing from other executives as well, and that's that the high-income consumer continues to be able to spend here. Break down, are you nervous at all that the high-income consumer will pull back? And also, you introduced those mini cans, and that seems to be doing really well for you guys, too.
Well, a huge part of our strategy is to meet the consumer where they are and to offer choice, not only from a brand perspective, but from a package perspective, across the many channels of business in which we operate. Higher income consumers, I think, are a little bit more resilient, a little bit more inelastic. So they're more in the business of looking for new choices on the brand, on the beverage front itself. It's at the lower end of the spectrum where I think we would be more focused in ensuring that we keep lower income consumers in our consumer base. And that's where our whole revenue growth management strategy comes into play, being able to adapt with different pack options, different absolute price points across the various channels in which we operate. So very pleased with the ongoing momentum that we see at the higher end, and very focused over the coming weeks and months to stay close to that lower end consumer.
And John, on that lower side, what should we be watching for from Coca-Cola to continue to meet that customer where they are? Anything new that you all are working on to try to adapt to maybe their price sensitivity?
Yeah, you're going to have on the package front, you will continue to see different pack size options that allows our bottling partners to offer solutions at different price points. And it's really important for us to understand the consumer psyche when it comes not just to percentages, but comes to absolute numbers, and being able to reach a targeted absolute price point will be a core part of what we continue to do going forward. We also, of course, have to continue to invest behind our brands to have them be more appealing. We have a great lineup in the fourth quarter. As always, as we head into the October period, Fanta has become synonymous with Halloween. And then we, of course, will have our usual plethora of great initiatives to celebrate Christmas. And then going into 2026, we're super excited about the World Cup coming here to the United States and the engagement that allows us to bring to the many people who are very passionate about the game of football.
John, there's certainly lots of momentum that has the street excited this morning. Last time when we spoke in July, we were talking about that plan to reintroduce real cane sugar. Where are we at now with that?
Well, that plan continues to move ahead full steam. In fact, we are rolling it out as we speak in a few markets here in the US, with the plan for that to phase into many markets in the course of the next number of months. So we're excited about adding that variant to our portfolio. There's a lot of interest out there, and we look forward to seeing how it does.
When it comes to different drinks in the portfolio, I know, for example, some of the lower sugar drinks have been performing well for you. I want to ask you about a question, about a story out of the UK. There is a chicken chain called Nando's. It's based in South Africa, but they have them in the UK. And there is a story that Nando's in the UK is limiting how many soft drinks, how many Coca-Colas their customers can get at once. And it has to do with new government regulations restricting sugar consumption. How concerned are you at Coca-Cola about that? Or is it going to drive you to continue to offer some more of those lower sugar offerings?
So first of all, Nando's is a great partner of ours in South Africa and in many other markets, and we have a tremendous relationship. We're very cognizant of both consumer trends and the interests that governments have around the world to help people manage their intake, and we're very supportive of measures to do so. It doesn't prevent us from still being able to be there at the moment of purchase to offer both our customers and our consumers a range of options that fit their daily needs. And so we're actually, overall, we're pleased to be able to participate in any activity that helps people, and at the same time in activities that help us as well, because the whole essence of our strategy is to follow the consumer. And as we've seen, not just in recent quarters, but a trend going back many, many years, people are consuming less calories, consuming less sugar, and we have an innovation agenda to be there with them as they pursue that path.
John, zero sugar was a big standout for you guys. It grew mid-single digits. If I do want to hit on quickly, value-added dairy was something that you guys are also making a big investment in. You're building this upstate facility to meet demand, especially in 2026. Is this one of many investments that you have here in the U.S. to build capacity out, or do you plan for more plants here in the U.S.?
So we're playing in a category that is on fire. The functional aspect of the Fairlife portfolio through the delivery of protein, etc., is resonating, along with the incredible taste that our team at Fairlife delivers. And yes, we see more investments on the horizon. We're keen to get the Webster plant up and running as fast as possible. It will be, I believe, the largest investment that we've ever made in a single production facility. So we are super focused on getting it working soon. But along the way will come will come further investments. The demand for our core portfolio continues to be very strong, and our team at Fairlife has a very exciting innovation pipeline that they're eager to get into the market as soon as possible.